Hear me now. Hear me?
Hello. Yes.
Okay, we're back again.
Yes. Okay, I had a question. What happens if it goes outside the ADR for that day? Do they halt trading or?
It may happen. So the ADR is simply the average of
Okay.
the number of pips. So they can increase it for a day, increase it, and the ADR value usually changes. So it's the average of 14 days.
Okay.
So the ADR that we have calculates the number of pips moved in the 14 days, finds the average, and you have the ADR there. Suppose Euro USD on last year, November, it had ADR of around 88 pips. But
Okay.
on the last quarter, it had until 40, 44, 48 pips. The ADR was reduced. And now I can see it is increasing. So I think the ADR is changing according to the quarters, the seasons of the quarters in the year. Another restriction that they have is that they have limited equity. So they cannot enter the market and cause a collapse because their equity is limited. So the regulators actually regulates even their profits. Like if a dealer has a certain equity, so they know that he would make a certain profit. So if we violate that, especially the dealers in the bank, they usually sue or get fired. So they are limited in that way.
Okay.
Okay, let's talk of the sessions. So we have the 3 sessions in of the 24 hours that we have. The first session is the Asian session. See this blue box here?
Yes.
This is the Asian session. So in our time here, the Asian session is midnight to around 8 in the morning.
Okay.
So our time is very favorable. So after Asian, we have the gap time here. The gap time is the time when, so on the Asian here, we have the first market maker in place, okay?
Okay.
The first dealer would deal with the Asian. In the gap time, the dealer on the Asian would contact the dealer who would come in the London, the second dealer here. So it contacts him and he will tell him all the craps he has done on the Asian session. So give him some few advice on where the pending orders are, the stop loss and all that. So information is taken to the London dealer. And then the London session is here now.
Okay.
Usually in the afternoon here. At your place is the time when you need to sleep.
Mm-hmm.
So here now we come to the gap time again. Gap time to London, going to New York. So here the second market maker will talk to the third one. Like I've done this and this during London session. So you should do this and this. You can do this and all that. And then the New York session comes. The red crimson box here.
Okay.
So, and here we expect for the Asian session to start very soon. So our time zone here is very favorable, very, very favorable. Because the London session is usually the session where the moves are. So you can see here the Asian session is, there's a consolidation, the move is in London, consolidation, move is in London. You can see that.
Yes.
So our time zone is very favorable. So as we understand the session, we need to understand the period setup now. Let's talk of the period setup first. Oh, let's talk of the trap zone first, trap zone. Therefore, us to understand the period setup. So trap moves. Trap moves are done to create trap zones, and the dealer uses trap zone to trap a certain amount of liquidity in a specific price range, then swings the market in one direction, leaving the liquidity in the zone trapped. So the dealer will set the trap zone high and swing the market low. It set the trap zone low and swing the market high. So when are these trap moves taken? So the dealer sets trap zones at the beginning and the end of the week. Why in the beginning of the week? The dealer needs enough liquidity to swing the market throughout the week. Why in the end of the week? The dealer needs enough liquidity to open the market in Monday. So he needs to trap a certain amount of traders so that he would open the market in Monday, having people in the market. At the beginning and end of the day. Why at the beginning of the day? Because the dealer needs enough liquidity to swing the market throughout the day. And the end of the day is usually the beginning of another day. So these two, they coincide. Okay?
Okay.
At the beginning and end of the session. So we see that there are 3 sessions, and the sessions are strategically put in time zones so that each session brings new targets to the market. So as people in New York wake up during New York session, they want to trade, there are new targets to the dealer. The same to the people in Asia, the same to the people in London session. So new session brings new targets. So during gap time there are usually trap moves. Dealer says trap moves 1 hour, then 2 hours after the session changeover, you'll find the dealer moving in the direction where it's supposed to move. And another trap move is set during the seasons now. We have the seasons. The last quarter the market was very rough. There are few number of pips, the ADR was very low. So the market was rough. For those who wanted to hold like me, it was a very rough quarter. So they set the trap zones during the seasons at the beginning and end of the season, and usually the trap zones are set in higher time frames. On the hour 4, on the daily, on the weekly time. So you'll find if it sets the trap zone in higher time frame, so in the lower time frames, you'll find the market is very rough.
Okay.
Okay, let's talk of the head mentality. The pack mentality, also less known as the gang mentality, describes how people can be influenced by their peers to adopt a certain behaviors on a largely emotional rather than rational basis. Here we talk of the peer pressure, like the people can be influenced to adopt a certain behavior.
Mm-hmm.
Like their peers, like their mentors. Okay.
Okay.
After all, human beings are animals who feel safe in numbers. And the people who control the market know this. So they know the psychology behind people. And these market makers, the people putting this into effect, want a certain outcome. And the outcome is based on a framework. So they have to set people on a certain framework. Ultimately, this is not about the market, but about mind control and how to control the actions of a head-based society. Okay.
Okay.
So the head is told to trade in a particular way. They trade the breakouts, they trade the support resistance, they follow the trends.
Okay.
These are the main ways that the head is told to trade. It's designed that way. And these dealers, this is an underlying structure framework, an underlying structural framework. There is an underlying structural framework used to take out anyone and everyone that uses this method of trading. So if you trade in the support resistance, the breakout, see there's a certain method of trade of taking you out of the trade. The stop hunt.
Yes.
So they will hunt your stop, take you out, and then they'll swing the market. So if the masses are already losing, why would you consume the same information that the masses use and expect not to lose? So do not be distracted by the head. So whatever I teach you, you need to stay with it. If you have a question, you come to me.
Okay.
Do not be influenced by the head. So you find people, the price action traders, they're very good influencers. They're very good at influencing others. So
Okay.
this is an example of headership. So you find there's a story here, the gate is only one, there's no fence, and they're leaving the story using this gate. This is the trap of thinking. So this is what the head is told. So your mindset should understand that this is business. No, it's not a hobby, it's not a game. So the dealer is laying there waiting for you to make an educated, emotional decision. So if you're treating this as a hobby, take a photography is very cheap. Do not lose your money to dealer's pockets. Now this is our chart. This is the chart observation. We have the candlesticks. We have the days here, the day labels, Tuesdays, Wednesdays, Thursdays. This was last week. I took this picture last week.
Okay.
We have the session here, Asian, the gap time, the London, gap time, the New York. We have the exponential moving average, the indicators, the lines here. These are the exponential moving average. You have the ADR marker, the ADR time 3. These are ADR boxes which I plot them manually. We have the stop punch box. We have the yesterday's low. This is the blue tracer. We'll talk of each indicator and the uses. This is yesterday's low, the blue tracer. We have the pivots, This down here is the traders dynamic index, the TDI. Okay, this is the chart observations that I use. And this is the dealer's board. The dealer uses this to move prices. Price matters to the dealer, so he uses this to move price. So as we move the price, the candlesticks print themselves, and you'll find this. You find the dealer's board when you click F10 on your MT4. This one is the dealer's board. You see the prices are moving.
Okay.
So there's the ask, the bid, the high of the day, the low of the day, and the time. So the dealer uses this. See, during news release, you find the prices are moving like they're speeding up. See, the movement will be very, very quick. And see like that. So that is where the dealer will change the spread and all that. If you find the prices are moving like that. So let's talk of the period setup. So the period setup, in the period setup, we shall talk on what the dealer does on the 24-hour period. Okay?
Okay.
So the main responsibility of the dealer is to provide liquidity. So when the day begins, for the dealer, we'll start with the accumulation phase. Here in the accumulation, we find the price swinging back and forth. This is the consolidation, and this swing is usually less than 50 pips. Usually 20 to 30 pips, less than 50 pips. So as the dealer is accumulating, here is where the dealer will accumulate the contracts, and you set the psychological support and resistance for the traders. And this is the Asian range. It's usually during the Asian session. Okay.
Okay.
So after the dealer has completed this, he would, if his intention is to buy, he would have a false move first.
Okay.
So the second stage is the stop and false move. In the false move is where the dealer will do the stop and toss in order to get that liquidity. So he'll do a false breakout down here. This will be the first swipe. So on this stop hunting, on this false move, he would do 3 swipes. 3 swipes. So this will be the first swipe. The first swipe will be around maybe 17 pips. So don't take these numbers and don't take this number. These numbers are simply examples. So it'll be around 17 pips. And here, breakout traders are told that this now is a sell. Okay, they wait for the retest. So the dealer would retest this area of support. This was an area for support, now it has become the resistance area. So we'll retest this and it'll offer the second swipe. Okay, it's saying that I'm selling again. And again, he'll do a pullback, and the third swipe will be on. So this top point will be around 17 pips. Maybe this will be around 12 pips. This will be around 11 pips. So basically here we have 10, 30, 40 pips, okay?
Okay.
This is a false move of 40 pips, and this false move is usually 25 to 50 pips from the blue box. The blue box is the Asian range. So 40 pips are enough. So people would be selling now, okay?
Okay.
The retail traders, the breakouts will be putting their selling orders here. So here the dealer would form the pattern. And this pattern, we will work on the anatomy of this pattern know what this pattern is working for the dealer, and then the real trend would start. So after trapping people here, here is the real trend, which will be 6 to 8 hours. So this is the first intraday level. Amy, are you getting me?
Oh, there's the W.
Yeah, now this is the pattern here.
Yes.
So the
So
dealer,
this is the bottom down there. That's the W.
yes.
Okay.
So after forming the pattern, now here will be the real trend now. The real trend is usually moving 6 to 8 hours. And here we have the first intraday level. We have the 3 levels, but they're called the 3 intraday level because it's within a day. Okay?
Okay.
3 intraday. So we have the first intraday, the second intraday, and the third. So after the real move now, the dealer will come back to consolidation. So the Asian range now is happening again. So this is the period setup. This is what the dealer does in a day. So from here to here, you'll find the dealer completing the ADR or even extending it a bit. So this is the period setup. So on our chart, you see this pounds today had very good stop loss. You see this, Amy?
Yes.
You see this. So the accumulation phase was here, and this one was the first, second, third. This was we call them the three white soldiers. So sometimes the dealer may do the stop hunt as this. You have 3 vector candles like this around gap time. Then soon after gap time, it formed an, see, this was a railroad track here. Okay.
Okay.
And it would form, this is an M here, but the second leg is a bit lower. So it formed the pattern here. So I entered today here around this area.
Okay.
And there you'll find our first, second, third. You see the 3 intraday.
Yes.
Completed the ADR for the day, even extended it a bit. So we should expect. So this, no, I was explaining the period setup, okay? So this is the period setup for the day. So you will find the stop hunt box. So the stop hunt box in my template, these ones, they are drawn as a background. So the stop hunt box are usually 25 to 50 pips from the Asian range. So here is 25 pips at the beginning of the box.
Okay.
Do you know how to read the pips from this crosshair?
Okay.
So you find that do you see the number 4? The 252 and the price 1.26754.
Yes.
So the 252, those are the number of pips. You put only 1 decimal place there, so it's 25.2.
Okay.
So there is 25 pips, and at the end of the box, you find is 50 pips. You see it?
Okay.
So this is the place where we would expect the dealer to do the stop hunt. As you can see here, done the stop hunt row. See these swipes, the first, second, the swipe, the third swipe here, from the pattern, and then he rolls. And here again, he did the stop hunt high, to the stop and box, form the pattern here, then you swing away. So that's the period setup. That's what the dealer does in a day. So this is an example. There's USD Swiss franc. There's stop and high, the M here. Boom, he moved away. This was Euro pound last week. Did the stop and high around Asian. See this pattern. This pattern happened today on pound USD.
Yes.
So same shit, different day. So these patterns happen every day. So you should learn how to take them. You'll be a winner. So stop hunting. Let's finish with the stop hunting. Let's finish with the stop hunting.
Okay.
Now, stop hunting is a strategy to the dealers. It's a strategy that attempts to force some market participants out of their positions. How does he do that? He drives the price of the asset. Here we talk of the currency pairs to a level where many individuals have chosen to set their stop loss orders. Now, the triggering of the stop losses generally leads to high volatility, and there can present a unique opportunity for investors who seek to trade in this environment. And there is where we get our second leg, and we are the investors who seek to trade in this environment. Okay.
Okay.
Now we can define a stop hunt again as the sharp move to the high or low. It can be the high of the previous day, the low of the previous day, the high low, the high or low of the previous week or month or a year. Now, the larger the time frame, the larger the stop hunt. So if the dealer does the stop hunt in the daily time frame, so the stop hunt will be large than the stop hunt in the 15 minutes time frame. Okay?
Okay.
And this one is the period setup. So the Asian opens at 0 hours. It is set to according to our time zone. The dealer sets the accumulation phase. So in the Asian box, the dealer sets the initial high of the day. We'll talk about that. So for today, I guess we'll end here. So 1 hour and a half already. Tomorrow we'll start with the patterns. And we'll go into the market maker cycle. Okay, so we meet again tomorrow.
Sounds good.
Yes.
Friday, I can only meet between like 9 and 11-ish my time. So we don't have to do Friday if you don't want to. If you want to push the last days to next week, we can do that.
Next week I have the bootcamp webinars. You say around 9 to 11. That's AM or PM?
AM.
AM.
Yes.
So when I was teaching Dana, it was around, if it's AM is 9 AM is, we are 7 hours in front of you. So 9 AM.
So that'd be like 4
4
p.m. your time.
4 p.m. Well, we can do that. We can have a session.
Okay.
Okay. So I'll send you the notes today.
Thank you.
And we'll meet again tomorrow.
Sounds great.
Okay, thank you.
Thank you. Bye-bye.
Okay.